Rob May is an electrical engineer turned entrepreneur, and he has built four tech companies as well as creating or participating in a number of other different types of businesses. And he's also an angel investor in over 100 startups. And in today's episode, we're going to be talking about his journey from electrical engineer designing various hardware devices all the way through to his latest tech startup company and what that's all about, some of the challenges that he's had, and some of the things that have gone right. I'm looking forward to talking with Rob today, and I invite you to listen in. I just wanted to say welcome to the podcast and thank you for being on it.
Thank you. I'm excited to do it.
People who are listening are going to be interested in your business journey as well as what you have to say about the main topic that we're covering today. But the key thing is if you've been able to do it, it gives them hope that they can do it despite all the ups and downs and all that goes with it.
I can tell you some great stories about the downs.
The downs are as much a part of the ups as anything because it's the downs that help us learn and figure out what to do next. Do you want to just basically tell our listeners a little bit about your background, who you are, and what you do?
So I'm Rob May. I am the co-founder and CEO of BrandGuard. This is my fourth startup. And by training, I'm an electrical engineer. So I used to do FPGA and ASIC design. And then my path went from engineering to sales engineering and business development. Then I worked for a startup. And then during the financial crash of '08, I actually started a company, and that company did really well. And that was my first startup. If that hadn't been such a good win, I don't know that I would have kept at it. But we had some good tailwinds there and some good market timing. And people think sometimes it's not about making a lot of mistakes. We made a lot of mistakes and still ended up okay. I think part of it is having a business model that can sustain those mistakes. And then started doing a lot of angel investing, started a second company, didn't work out, went into VC for a while as a partner at a firm called PJC. Led all their AI and robotics investing. But then this AI wave came about and I just had to scratch the itch one more time and get back on the operator side.
Just explain what you're working on right now, just a little bit more so people understand that.
One of the ways I think about business ideas is I'll go back to like Web 1.0 and the rise of content. When you look at web content, in the late 90s, the ability to put stuff online, you would have thought this is going to be great for the newspapers because they already have distribution, readers, reporters, and staff. Now it'll lower their cost to distribute, and they're going to be great. What you actually found was something very different, which is it hurt their business model because it made it easy for other people to compete with them. And so what happens, so the mental model I use is, where did Google come from? When you have an explosion of content, you needed somebody to figure out what you should look at, search and sort and all that. So I always think about AI investing and AI entrepreneurship. I think about where you're going to get explosions of stuff and what is that going to change and mean. You need something that we're not thinking about a lot now is going to become a big problem and we're going to have to address it. What we do at BrandGuard is got started creating generative AI advertisements. So the idea was I could take this phone case and if I want to make Google ads or Facebook ads for it, I could slice and dice my demographics 1,000 different ways. And then I could have ChatGPT write a different ad or have Stable Diffusion create a different ad for every one. And when we would do that, we would try to sell it to CMOs and they would say, if you're going to make 2,000 different ads for me, I have to review them all. And I was like, wow, generative AI is going to create a ton of marketing content, advertising content, and it's all got to be on brand. It's all got to be, somebody's got to look at it all. And what if you could teach a machine to do that instead? So we built this tool called BrandGuard, which is a new class of software that we're calling a brand governance platform. So what it does is for consumer brands, it's really important that they're consistent in their messaging. The world is noisy and we have a lot of data that shows that the more consistent you say your things, even when you're personalizing it, you might use different words to a younger person versus an older person, a man versus a woman, somebody in Iowa versus somebody in Hawaii, in Europe or whatever. But if you can use different words, but keep the message, the core message and the value props consistent, you'll see a lot more growth. And so we ensure consistency in human-related, but more importantly, machine-generated content to make sure that it meets all your brand guidelines, that it meets the stuff that you've put out before, and that it's just high quality and everything else. It's a new category of software, but it's growing pretty fast.
That's interesting. You call it a brand governance platform. And I'm just thinking about that. So yes, using machine learning to just go back in and check, partly to do that checking part of it. On a scale of 1 to 10, how much do you think people will trust it at this stage of the game with AI?
Oh, like 2. So not very much. But what I'll tell you, but it's one of the challenges, right? When you design AI products, the barrier that you face is everybody that we talk to says the same thing. We're talking to a bunch of big companies that are like, we're gonna I don't know if they want to. They're going to be forced by competitive dynamics to roll out generative AI at scale on their marketing materials and personalization. And they're scared to death to do it because they don't trust the machines to put out good stuff. So they need a tool like ours, but they don't fully trust our machine either. So the way we do this is when you build these kinds of companies, you have to think about the hand-holding process. How do you teach somebody to crawl, walk, run? And we don't come in and turn everything over to the machine and all that kind of stuff. We say, why don't you get used to the machine giving you a score and some feedback on all your content, but humans approve everything else. And now you've seen a lot of the content. Doesn't it seem like the machine's pretty good? Plus, you're teaching the machine because you're telling the machine when it's wrong. Yes, no, this is good, this is bad. So then it's, how about if the machine's 98% sure, you just let it go? Or if it scores something really low, you let that go. And you just focus on the middle stuff now, and you can slowly shrink that middle. And I think that's how you get humans more comfortable with those things. But yeah, we are not there today.
It's interesting because I know just enough about ads to be dangerous. And basically, you have this whole process that you go through where you create these ad creatives, these assets, and you use them and you put them up. And the tools that you put them up on, whether it's Google or Facebook or whatever, there's still this amazingly gray area about what's working, what doesn't. How do the analytics work? How do you attribute the success of one particular ad against another with your platform? So this is getting a little bit into the detail, but I am curious because your platform helps create all the different assets.
We only score them. So think about it this way. If you say you're selling pet food, and the truth is your pet food's pretty broad in terms of who you can sell it to. You want to create an ad, and you're going to have a 24-year-old woman in New England who has a beagle, and that's going to be your dog food ad. A 55-year-old woman, a 70-year-old man, or somebody that's not like that person is going to see that, and it's going to be like, okay, it's interesting, but you're more likely to convert if you see a person like you in the ad, if they have the pet that you have, if they're in the city that you're in or whatever. As a pet food company, you can't afford to go out and get like 40 different models of all ages, races, genders, and whatever, because it would be really expensive. With generative AI, you can shoot one shot, one photo shoot, and you can swap that out with like artificially generated people that look very real. And then you can swap out the dogs that they have for like 300 different dog breeds in the United States that are popular. So you could do that. So now I have 300 dog breeds. Say if you break people down into 4-year age brackets, men and women in the top 5 ethnicities, is now you've got this explosion of 15,000 combinations of ads you could have. You can run that with generative AI. Well, the question is, if you're going to do that, how do you know that it's good when you start swapping this out and having machines like put somebody in? If you've used these models, what if somebody comes in and they have 3 eyeballs or 6 fingers on their hand? Or what if they're just wearing something like, we have this blog post where we show Midjourney. So if you don't know, Midjourney is a tool where you type in some words and it creates a picture. And we type in glass of beer sitting on a table in a crowded bar. That could come out lots of different ways. Glasses of beer could look very different. Bars could look very different. The table could look very different. We show 2 different examples, and it becomes really clear that one looks a little more Heineken and one looks a little more Budweiser. So what we try to do is say, if you're going to do this at scale, is the stuff that's created going to meet your brand guidelines? Because to the people that run these consumer brands, this is everything to them. These people have rules. Brand managers look at things like anything that's over the word of the brand can't go past the center, all kinds of weird things that are really important to them because they want to drive that brand consistency, and every little thing means something and gives off some signal or some feeling or represents some value. We enforce that. So you can think about it this way. If you want to get to the point where you create 100,000 pieces of content a month for marketing, which is a lot, no human could do it. We can help you sort through it and say, these are really good, these are really bad. Here's the stuff a human should review in the middle. So you can use this stuff at scale.
It's an interesting model. And I think the whole, I guess, is going, wow, that is overwhelming in terms of, like, I'm putting my CMO hat on and going, okay, first of all, there's the creation, there's the concept. You create the concept, then there's the multiplication of all of the different pieces of content. Then there's a process that your platform goes through and comes back with a score or whatever. And then you've got this multiplicity of assets. You still have to go out and put them up. Is there a tool that does that?
It's a good question. I don't know if there's a tool that's totally omni-channel for doing that yet. I suspect it'll come in this generative AI world. We have a Chrome plugin so that you can score assets in the tool that you create them in, because here's what's going to happen. Your entire marketing stack is going to have generative AI built in. Your email tools like HubSpot, Marketo, Klaviyo, your blogging tools like Word, your design tools like Figma, Canva, Adobe already has it. And however many tools you use, like these are all going to have generative capabilities built in. and you're going to want to check your assets and make sure that you're following your brand guidelines everywhere, particularly if you have a big marketing team, if you have third-party contractors, if you have partners. One of the use cases we see a lot is like franchisor, franchisee. I'm the franchisor, I have the brand. I'm going to give you some assets. You're allowed to modify them, but don't modify them too much. What's too much? So you can imagine if you're a small business owner, you own a Subway franchise, and then you're like working your fingers to the bone to make the thing work. The last thing you want to do is wait on a 3-day turnaround from corporate to approve your hacked together ad. If you can just upload it to a website, yes, it's on brand, it's not, you can run it, you can't, saves everybody in the process a lot of time.
That's interesting. Basically, it sounds as though it's structured so that multiple people can actually see what's there. It's like an account, and multiple people can sign into the account and see what's there. That's really interesting. I'm curious, I want to come back a little bit to the business side of things. You realized that this is a thing. Obviously, AI is definitely a thing. Anybody who's been deep into AI knows it's been around for a while, but it's not been popular until just very recently. Talk a little bit about the journey towards actually setting up your current startup.
Having done this, the thing I always hear from people is they're like, I don't know where to start. I wouldn't know how to start a company. And so I started a couple different companies, most of them tech companies, but I did start a bakery at one point as a sort of side project that was related to some work my sister does. It is way more complicated to start a small business like that than it is a tech company. Let me just tell you, like getting all the food permits and running in circles and all that. But from a tech company perspective, I think you have to figure out what your idea is, how you get it built, how you want to incorporate. If you're going to take venture capital, people want you to be a C corporation. If not, probably a LLC or some other model in North America is better. And you have to be able to recruit a team. The thing that's valuable when you is like anything else, it compounds the more you do this. So having done a bunch of startups, I was able to call some people that used to work for me, and some of them were available, some of them weren't. Some of them were thinking about being available. And you can pull in people that when you work with somebody for the first time, you got to feel them out. How do we think about this? What happens the first time we fight? Like in any kind of human relationship, there's a bunch of people that I've worked with for years, and I know how they think, and I know what their flaws and weaknesses are, what their strengths are, and they know mine. And so we can pull in some of those people, and it helps you move really fast. It's the same way with investing relationships. Like the early investors in BrandGuard were all people that I knew I had sat on boards with. They had backed previous companies and things that I've done. It's always hard to raise money, but if you have established relationships, and particularly if you've returned people capital before, it's always a little bit easier.
It's always easier than having crashed and burnt and having to go back and ask. I'm curious, you mentioned, you specifically used the word fight. Have you had your first fight yet? And how do people fight? I'm curious, when you're working with your team and when you're thinking about hiring people for your team, how do you go about ascertaining exactly how people react when there's a conflict situation?
Ooh, that is a great question. It's something that's very difficult to hire for, because people will tell you that they want to be in a very transparent company where everybody just say what they think. And people are actually really different. Some people do debate well and can deal with it, but that's not the majority of people. Some people, the first time they're confronted, quickly back down. That's a bad trait, because if you know something the rest of us don't, you need to follow through with it. And some people get offended and they turn on and they get super angry and combative. And you get two people like that and you get big blow up arguments. And so it's a combination of things. One thing I would do is I try to get at people's personality types by asking them certain questions that are not directly related to work. I'll give an example. How type A and organized is somebody? I'll ask them this question. Whatever time you normally go to bed, say you normally go to bed at 11 p.m. If you come back from a trip an hour and a half past your bedtime and you're tired, you have to go to work at normal time the next morning, it's a weekday, are you going to unpack your suitcase, put everything away, all that? Are you going to do just enough to go to bed? What kind of person are you? Can you let it slide? And you'd be surprised. The people that you want to be your accountants are the people, yes, I put everything away that night, even if I'm up longer, because it needs to be organized and done right. And maybe your people that are a little more creative are like, oh, I might live out of the suitcase for 4 days until I have time to get to it. So I ask people questions like that. And I have some other ones that I've pulled through my career to see. I typically ask people to tell me a story about conflict and how they handled it. I like to ask people what they would change about the way they handle conflict. Is there somebody they wish they could be? And then that's one thing. Second thing is I try to balance my teams. I'm not too religious about any of the tests, DISC or PI or any of these personality traits, Big 7, Big 8, whatever it is. Anyway, but I like to look at them and figure out some stuff about people. And I just try to, Enneagram, whatever, I try to just blend my team a little bit. You always want one person on the team who's, let's go, always wants to push forward, even if you're not ready. You always want somebody that's a little bit like, hey, are we ready? This isn't right. And you want that tension. And then you as the leader want to try to manage that tension, acknowledge that both points of view are good points of view, and figure out when you like step in and make a decision, because there are business situations where you want to rush something out the door for market purposes, even if it's not quite ready. And there are other business situations where you don't want to launch it until it's perfect. And you can't be too absolutist about it. And the third and final thing that I'll say is I teach a communications course to everybody. And so when people come in, we have a 1-hour course. Everybody has to take it once a year. That's how you have hard discussions at work. And more than anything, it's training, and it lays the groundwork for what I expect. And I tell people, like, I expect you to speak up. I expect you to do it in ways that are polite. And, you know, if you feel like somebody's attacking you, here are the kinds of things that you say. Here's how you handle that. And I feel like we've built a really good culture of conflict in some ways that's productive.
I think that's really important. In my past life as a chief information officer, one of the most important questions was, how do you handle conflict? How do you communicate? And it's interesting what will come out in those types of scenarios. I'm interested in terms of what you've just said, in terms of what you look for when you bring people on, how you communicate, what your expectations are, and things like that. If you think about all the different times that you've started a business, how have you handled the transition from small, flexible, fast startup to one that's more stable? Everybody has a specific thing that they're responsible for, and stay in your lane and all those sorts of things. How do you handle that transition?
That is a tough one. I always tell people, at least in software companies, 25 or 30 to 60 employees is my least favorite phase, because once you're over 60 employees, you have departments, you have a vice president of every department, or at least a leader of the department, and every department has more than one person. But before that, you go through these times where it's like you have a head of engineering and 5 engineers. You don't have anybody in customer support. You have one person in marketing, and it's a junior person in marketing. You don't have a leader in marketing yet. And so you're like, who should be on the executive team? We need marketing represented, but we have a new grad right out of college who's doing that. So it's really hard. And when you're in between, you get these people, maybe they've been at multi-person companies and they want to come down to a startup, and they think like 35 people is not very much. And they come in and they're like, oh my gosh, there's no infrastructure, there's no rules or anything else. Meanwhile, the people that came in early that liked being employee 10, 11, and 12 are like, this place isn't the same. There's too many rules. There's too much structure. And you're like, how can you both be true? So it's really difficult to manage. And I think part of the way you manage it is you talk about it to people. And I tell people now, you should expect this. We're going to go through this phase, and it's going to be painful in this way. And here's the things we have to do and keep in mind to get through it. And the second thing is you have to find like your early employees, your people that are just like pirates and want to do weird stuff and want to join a startup, which no rational person should ever be the first 20 employees everywhere, anywhere. It's a terrible idea. But the people that love it, you have to find roles for them, move them around, make them generalists, and put them in charge of other stuff, because they have a lot of internal knowledge. They've seen the process of how we got here. And sometimes you have to be creative with titles or putting them in specific roles. We try some of that, but you also have to remind everybody that the goal, if you think of a company like any other organism, to grow up, and that means certain types of things. There are ways that you can try to stay innovative. When we make budgets for the year for my departments, I'm always like, all right, 10% of your budget needs to be dedicated to stuff that's purely experimental that you expect to fail, particularly in marketing, but also in product. Even in something like finance or engineering, it could be like trying a new tool or something like that maybe they wouldn't do otherwise. And people just get in that mind. If they're being judged on that, then they're going to do it and they're going to try it. And I'm saying, okay, you might have wasted 10% of your budget, but that's an investment in us becoming the innovative company we need to be. So those are some of the things that I've used to try to do that, but it's a hard transition to make.
And in that transition, you also obviously trying to build innovation into your DNA so that you don't end up becoming something that's obsolete because the world's moving so quickly. That's interesting. Lots of companies have done that. You hear the stories about you're allowed to set aside 20% of your time, 10% of your time, work on something. And it seems to be an effective way of maintaining freshness. And besides, 10%, a 10% investment in your budget, if you end up with another product that's going to just blitz everything else, is probably worth it. I want to swing back just a little bit. You said you started up 4 different businesses. Have you had a quick question first, and then the real question, which is, for each of those 4 businesses, have you always had investment, somebody else come in and invest in your business?
I should probably clarify. I've had the bakery, it was self-funded. That was all that I did. So I've had some small business initiatives. I owned another franchise early in my career. So those have been self-funded or bank funded. And then I've had 4 tech companies that were venture funded. And it's interesting because you also have to think about different capital providers have different goals. They have different things they want to see. They have different expectations about what you're going to do and how your company's going to be run. And so it's definitely something that you got to factor in. Your financing strategy can change a lot depending on what you're trying to do.
If you think back to your first, or probably it could be your first or your second, it's just a question of how both of those went down. And just for people who might be thinking about, or they're starting a tech company and they're at that stage where they're ready to reach out for investment, somebody else to bring in a little bit of capital, maybe just tell us a story of what it was like for you when you were actually going out there for the first or second time, looking for investors who would believe in you enough to open their wallets.
The first time that you go to raise money, it's really difficult, particularly if you just have an idea or prototype and you don't have traction yet. If you're able to get some user traction, my first company, I built it on the side, like nights and weekends while I had a day job. So I had some income, and raised a little bit of angel money that I used to hire some programmers and kept my job instead of paying myself and worked through that. So we had a little bit of traction when we went out to raise, and we had a few thousand users, and it was still hard because venture capitalists have a high bar. They think of this as venture capital is rocket fuel. Unless you have a rocket, don't put this in a lawnmower. It won't work out. You'll blow it up. And this is true. If you take venture capital in a business that's not going to hit venture scale, you're going to run it into the ground when you probably could have built a nice small business or lifestyle business and made a lot of money with a different financing path. So it is hard. It is a lot of no's. It's a lot of people that don't get what you're doing. It's a lot of people telling you why you can't do something. It really takes a very gritty, determined personality, because sometimes I'll talk to people and they're like, we talked to 3 VCs and they all said this wouldn't work. And it's talk to 30. I mean, I would expect at a seed round that you would talk to 20 plus VCs to get 5 or 6 down your pipeline to get one to lead your round. And it's like anything other sales process. You want to talk to people, you want to learn the objections, you want to figure out how to counter the objections, and then you want to push through. But a lot of it's going to come down, like what people miss about it is they think there's an absolute bar. And if you just hit this bar, you'll get funding. And if you're below this bar, you don't. That's not how it works. It's relative. It's dynamic. To get funded, you have to be better than everything else that people are seeing in the market. You have to be in, say, the top 20% of deals that I'm seeing right now. Even if you're doing great, if it's a market and everybody's doing great and things are easy, you might not get funded. And if you're in a tough market and maybe you're doing okay, it's like you might look way better than everybody else, but it's relative traction. And it's really your ability to tell a story, which is hard for a lot. Like, I'm an engineer by training. It took me years to get good at storytelling.
I'm smiling because I just interviewed somebody yesterday who basically said that out of all of the people that they work with, engineers are the hardest because they do struggle with storytelling. So I'm curious, how did you get good at it, basically? How did you overcome that tendency to focus on the engineering side and then move to the storytelling side?
Even after doing this for 15, 18 years, whatever I've been doing, I still sometimes get bogged down in the engineering stuff, and people have to tell me, Rob, we know the tech's cool, bring it back up. The first thing that happened is you have to be willing to be a little bit uncomfortable. So I had 2 early angel investors who had sold their company and done really well. And they were still running parts of the company, and they would have me come in and pitch their employees. And they would bring somebody in and I would pitch them what we did. And they would ask the employee, okay, regurgitate what this company does. And they would be so far off. And I'd be like, okay, I didn't explain it well, but hearing it. And we would try again, and they would bring somebody else in. And at first it feels super awkward, but eventually you just get comfortable pitching because you're doing it so much. I probably did my pitch to 30 or 40 employees there before I even started doing it to VCs. And I did another 30 VCs. I probably pitched it 100 times to the point that I would tell the jokes at the same pace. I could click through my slide deck without looking at it because I just knew it. And constant feedback. It's hard because you have to let people tell you what you're not doing well, but you also have to remember that everybody's a little different. So you're going to get feedback where somebody's going to tell you be more like this, and somebody else is going to tell you the opposite. So you have to get lots of feedback, lots of different perspectives, and you have to determine, okay, where is it aggregating? Where is it trending? And also what's authentic for me. The biggest piece about storytelling is you have to be authentic. If you're not a certain type, if you're not a go take the hill person, but you're more thoughtful and reserved, don't try to be that person. Be the best version of a thoughtful, reserved type of CEO that you can be. And so sometimes people think they need to be a certain way, but you just need to be the most outgoing, concise, crisp, good storyteller that you're capable of being while still being true to yourself. It just takes a lot of practice.
I'm intrigued by the fact that you had somebody or a couple of somebodies who were willing to bring you into their business and get you to do the pitching and get that practice. That's pretty amazing. It's an interesting way of learning how to do something. And so if you think about the first time that you went through that process of finding somebody who's willing to basically fund you, and you think about your most recent sort of focus on doing that, what would have been the sort of 2 or 3 key things that you would have learned and done differently between the first and the fourth time?
One thing is people believe that finding venture capital investors is a persuasion problem, but it's not. It's a matching problem. You aren't going to convince somebody who doesn't have your point of view on the world that the world is going in your direction. What you really want, startups should have some insight about where the world's going. And what you want is when you explain that insight to somebody, you want them to be like, yes, we agree. We think the world's going this way too. Maybe they even haven't thought about it, but they instantly recognize, oh, wow, you're right. But if somebody tells you, I don't think the world's going to pan out that way, and here's why people don't use your product, like arguing with them and trying to convince them, you should just move on. That's probably not going to happen. So one thing is, it's not a persuasion problem, it's a matching problem. You have to talk to lots of people, and you have to find the firms that like your stage, your style, your industry. I think the second thing is you have to be pretty direct about what you want. And I think a lot of times entrepreneurs are afraid to press investors because they don't want to get a no. And so you're like, as long as they haven't told me no, maybe they're still in it. But you don't want to be a jerk and be like, all right, you got 24 hours, give me an answer, whatever. But you want to be persistent. And I would follow up once every week, 2 weeks, and just keep asking questions and just keep going and make them tell you, no, we're not interested. Sometimes it gets a little embarrassing after you send somebody like 9 emails and called them twice and they still haven't responded, but I just keep at it. So you definitely have to be persistent. And then number 3, ask people for feedback. Ask how you can get better. I always tell people, look, if you decide not to do this, can you at least tell me why? Because those are objections that'll help me raise funding down the road if I can be prepared to answer them. Those would probably be some of the main things that I got more comfortable with.
It makes a lot of sense. It's like a lot of other things. As you said, it's a sales process, a matching process, and a sort of finding somebody who's going to say yes. Just quickly, curiosity question. Do you use an agency or somebody who helps you go out and find potential people to talk to? Or do you just do all of that finding yourself?
I've pitched enough people now that I can call 50 or 60 VC firms. I have worked in situations where I've not been a founder, but I've been like once an early team member, and once I was part of a venture fund that used placement agents. And it depends. They're appropriate for certain types of businesses, but VC is a little bit off on the side. I don't know that it's good for VC. But there's certain types of businesses that don't really fit in VC. Maybe you need to raise VC amounts of money, maybe $5 or $7 million, but it's for something more traditional. You're going to buy a bed and breakfast, or you're going to build a new bed and breakfast concept, or whatever it might be. Your valuations are going to be very different than technical valuations, and your terms on the financing are going to be very different. And your return profile is probably also going to be more predictable. And the vast majority of the people in the world that have money don't invest in startups, because 9 out of 10 times you lose your money, or whatever the stat is. And it's true. So if you're going to do it, you have to do a lot of it, because you have to make sure that you do 40, 50, 60 deals and that you get a winner or two.
They don't sound like great odds, but the payoffs ends up making it worthwhile. In terms of the 4 businesses that you've started, tech businesses that you've started, do you still have them? Have you sold them? Do you build with them with the intent to sell eventually, or end up building just an empire of businesses that you hold on to?
When I built my first one, I didn't know what I was going to do. And we ultimately sold it and did really well. And that was just because I was tired. Learning to be a CEO, I was 31 when I started the company. It was hard. And there were a lot of things I didn't know. I was an engineer. I knew a little bit of finance and economics, but I didn't know marketing. I didn't know sales. I didn't know all these other things. I didn't know how to run or scale a business. I'd managed some people in small groups, but so it was a lot to learn. It was stressful, and I was tired and ready to get out. I probably should have held on to it. It's a really good company. My second company didn't work out very well. We got stuck around $1 million in revenue and just were churning customers, but always signing up some new ones. Picked the wrong market segment. We're a little too slow to adapt. And so that company got acquired, but it was not a great outcome for the investors. The third company I didn't run, I co-founded, but was the CTO. And that company was doing well. We were acquiring businesses and using tech to improve them. The parts of the company are still around, but we got in some trouble with our debt provider. And so I actually went in and bought out some of the assets of the company, some of the tech assets, to spin off into this new startup. And then everybody broke up the company and did some other stuff there. With this new company, with BrandGuard, I'd like to not sell it. I'm not good at working for other people. Even when I thought I co-founded a company, hired a CEO who I knew really well, had been a mentor to me. And I think I was still the thorn in everybody's side. I'm just super opinionated, and I like to give feedback, and I'm very comfortable making quick decisions. I've learned to be a CEO, for better or for worse. And so I decided to just lean back into that at BrandGuard. And you always have to ask yourself, if you get a really good offer on the company, what you would do. But I'd like to take this one all the way and run it for the rest of my career. We'll see.
And that's one of the nice things about working for yourself. You can make those decisions. Obviously, depending on what happens, there's things that can knock your sort of vision off the perch, but it gives you a chance to decide for yourself. One last quick
Right.
question before we wrap up. Thinking about everything that you've learned and the work that you're doing now with BrandGuard, what would you say is the biggest challenge for the future that BrandGuard will be facing as a startup company in the AI space?
Wow, that's a really good question. Scaling AI companies is really difficult right now because on the infrastructure side, we're not used to a situation where it's hard to get access to servers. It's hard to get access to GPUs, which we need. And so that's a problem. And it's hard to get access to AI talent. And both of those, I don't want to say it. The talent piece should go away over time. The market should fix itself. Piece, the market is moving so fast and there's so many other innovations. And the AI software is so good at pushing the limits of what the GPUs can do that you have to stay on the edge of that. Might be a problem for us for a long time. So if you think about it from a business perspective, we might be supplier constrained, and that could be problematic. There's ways around that. We could pay higher prices than other people. Well, that's not good for the business model. Maybe we could prepay some stuff and get some advantages there. That might be fine for the business model, but bad for the financing of the company. You normally want to do the reverse. So there's definitely some challenges there, but I think supply constraints in AI software companies are legitimate issues for scaling.
Interesting, which of course means there's opportunities in the supplier space to
Yeah.
actually get in there and actually provide what's needed. It's been really interesting speaking with you, Rob. If people were interested in either finding out more about BrandGuard or getting in touch with you personally, where would they go?
You can go to AI to check it out. You want to see a demo or anything like that if you think it's right for your company. You can follow me personally. I write a Substack about investing in AI, and it's just investing in AI. And maybe twice a month, I write about things I'm seeing in the market. I'm an angel investor in dozens of AI tech companies, and you can always email me there and I'm happy to respond.
Fantastic. We'll put those in the show notes. Do you have a podcast? I thought I saw something somewhere.
I do. I run the AI Innovators podcast. It's a side project. I have this group called the AI Innovators Community, and we try to bring people together working on AI stuff, regardless of any sort of school or company affiliation, and interview entrepreneurs for it that are building AI companies. You can find it on Apple or any of the podcast places. Just look for the AI Innovators podcast.
Excellent. And we'll put that in the show notes as well. And I shall check it out myself. I love listening to podcasts. Rob, thank you so much for being on the podcast. It's been really lovely having you here.
Thanks for having me. This was fun.